Hi, Assalamualaikum warahmatullahi wabarakatuh and a very good day. Today I would like to present to you our group assignment for Ethics and Activity for our course of PAF 3093. And here I would like to introduce you to my group member. Our project overview consists overview of article, key issues, alternative course of action evaluation, recommendation of justification on the best course of action, significance of ethics and integrity, and lastly, professional codes of conduct.
Assalamualaikum and hi. My name is Khairunisa binti Khairul Walif from AE14. Today I'm going to present about ethics and integrity cases of McDonald's. I will start by introducing the McDonald's. McDonald's is a famous fast food restaurant with more than 35,000 branches around the world. It was founded on May 15, 1940 by Richard McDonald. McDonald's offer uniform menus as well as fries, nuggets, burgers, and chicken. McDonald's serves around 70 million customers per day, which makes it becomes the most largest share in the fast food restaurant industry in US. McDonald's France has been accused of breaking the ethics in accounting, which is they have been involved in the tax fraud case. The company was accused of hiding French profits in lower tax Luxembourg from 2009 to 2020 and reporting artificially low profits in France. The prosecutor's office said McDonald's France, McDonald's System of France, McD Luxembourg Real Estate, and other related companies agreed to pay a total of 1.24 billion euros in fines, penalties, and back taxes to settle the case after years of negotiations. The Greens, or known as EFA Group, has requested that McDonald's need to appear in front of the European Parliament for a hearing on multinationals, which has been organized by the Special Tax Committee on 21st June.
There are three alternative courses of action that could have been taken by the company. Number one is to train staff to recognize and prevent fiscal crime. And the second one is to create staff bonuses. And the third one would be to keep good records. Course of action evaluation for trained staff to recognize and prevent fiscal crime. But what I mean by doing this is to help staff understand different types of fraud and also to help staff to identify any fraudulent practice in the company. This will help the company to stay on a good line and will make them achieve a good future. And the second one is to create staff bonuses. Well, staff bonuses would mean that the staff would love the company. It is a good incentive when it comes to bonuses and money, and it would win the heart of the staff. And the third one is to keep good records. This will improve business process and operation in many ways. Recommendation of justification on the best course of action is to train staff to recognize and prevent fiscal crime. In order to do this, the company is required to create a course for the staff to understand what is fiscal crime and how to prevent it firsthand. By doing this, the company will also spread awareness among the staff, and they would also have an idea about what are the consequences that are going to happen to company and also to the individual itself if they are involved in a fraud or they are involved in any fiscal crime in the company.
Hi, my name is Adrana Alisa and I would like to explain about significance of ethics and integrity. Ethics are important in many aspects of business, especially when it comes to your company's accounting books. Even though you might not be an accountant, you are expected to exhibit the same qualities as them when you handle your books. First, you must maintain the public trust. One of the primary responsibilities of accountant is to provide accurate and reliable financial information to stakeholders. The public and investors rely on this information to make informed decisions about investing in companies. If accountants do not adhere to ethical principles, it can lead to a lost public trust in accounting profession and damage the reputation of the profession. The second one is legal compliance. Accountants are required to comply with legal and regulatory requirements when preparing financial statements. Failure to comply with these requirements can result in legal action against the accountant and their firm. Adherence to ethical principles help accountants to ensure that they comply with legal and regulatory requirements. The third one is maintaining professionalism. Adherence to ethical principles is a hallmark of professionalism in the accounting profession. Professionalism is critical to building and maintaining trust in accountant-client relationship. Ethical behavior demonstrates a commitment to the profession and a willingness to act in the best interest of clients. And the fourth one is risk management. Unethical behavior in accounting can lead to significant risk for the accountant and their firm. Misrepresentation of financial information can lead to legal action, reputationally damage, and financial loss for clients and stakeholders. Adherence to ethical principles help accountants to mitigate this risk and protect their clients and stakeholders. There are a few examples of components that can be found in the Code of Conduct that accountants need to comply with, which is integrity, objectivity, competence, confidentiality, and professionalism. Integrity requires being straightforward and truthful in all commercial and professional contexts. Accountants need to be ethical, open, and truthful. They ought to uphold the highest ethical standards and always act with integrity. Being clear and honest in all business and professional dealings is a sign of integrity. Next is objectivity. It is essential for any member who is using professional judgment and must be objective. It is equally important for members who work and for those who engage in public practice. Next is competence. Refers to a member's ongoing obligation to maintain professional knowledge and skill at a level required to ensure that clients or employers receive competent professional service. When offering professional service, members must act diligently in accordance with applicable technical and professional standards. Confidentiality is defined as the entrusting of private information to a person with reliance on their fidelity or competence. The trust that underpins a professional relationship is violated if an accounting expert discloses financial information without express consent or divulge the outcome of the potential merger, unless there is a legitimate business or legal purpose to do so. Accounting professionals must follow the law and regulations that govern their domains and bodies of work in order to be ethical. Avoiding behavior that could harm the profession's reputation is a realistic commitment that business partners and others should anticipate.